So you're good to go.
Thanks so much, Ellie. So
Thanks.
thanks so much. I'm really happy to be here speaking at this conference. It's amazing. I think in many ways, I want to thank David Palmer for an excellent session on kind of the trends that are really changing the model risk landscape. So in many ways, I think this presentation, I hope, is really a continuation of David's presentation. My name is Stu Bailey. I'm a co-founder of Model Op. We're an organization that has been helping large organizations govern and scale their AI initiatives for several years now. The way we do that, we are a software company. We have a software platform called Model Op Center that helps with various aspects of scaling and governing enterprise AI initiatives. We're across industries, but we have a very heavy concentration in banking and financial services and have since our inception. And what we found over the last couple of years is that model risk has been an important area for organizations to focus on with respect to scaling and governing enterprise AI initiatives. And in fact, so that's what and for all of the reasons that David mentioned in the previous session. So what I'll talk to you today is kind of a perspective that we have serving our customer base, primarily very large banks and financial services, but increasingly mid-size, kind of 40 billion in assets and above is increasingly a growing segment of our business. And so I'll try to share with you kind of concrete experiences that we've had over the last few years, specifically helping model risk teams kind of change the narrative from maybe even an inhibitor to scale and growth for AI initiatives to really being an amplifier. And so I'll try to give you specific examples that we've gotten, as well as kind of general comments. And also importantly, I want to focus and give you some tools to really tell within your organization the story you already know, but from our experience, tell it in a way that will improve the possibility of kind of accelerating your journey on what we would call industrializing the model risk process for enterprise AI today in 2022 and future-proofing going forward so it can scale. So let me start with a very high level kind of perspective, right? And I think David talked about some of the kind of more detailed challenges, but just from an enterprise perspective, from our experience, this is the narrative across the industry, especially in financial services and banking, that we've found. In the end, today, model risk management processes as they're kind of conceived today tend to be a limiting factor for kind of the virtuous cycle of return on AI investments. But let's look at that cycle kind of in detail. Well, at a high level, but with some specific detail. So first, it all starts with the business function. We know that. So in this slide, the gold boxes are really business unit concerns, and the black boxes are the enterprise unit concerns. And so the choice to invest, to say, hey, look, we need to provide, better visibility. We need to be able to process more applications for credit. We need to be able to respond to our customers through, various channels of customer support and service. The business unit functions kind of drive the requirements for investing in AI so that they'll get more return from that. So the coins are really, that's where the money starts. And that investment goes to data scientists, data science tools, right? And that is an exciting space. And in our experience in banking and financial services is quite mature in terms of both the investment of tools, and there are a lot of tools in the AI ML kind of platform space, in the data science function itself. Obviously, these businesses have been model driven in financial services for decades. So there's a lot of strong analytic muscle that can really evaluate whether ML's truly a better idea for model development. And what we see there is that the idea is that models actually start to make the decisions rather than simply be tools to help the humans in the business unit make the decision. So that's kind of the AI story. But of course, the models coming out of that investment have to be, they're just model candidates, and especially when there's a risk associated with the decisions that are being made. And so they go to the model risk management function. And we know this scales with headcount, and I'll talk about some of the other challenges. And then those approved models go into production, assuming they're actually improving the spend on, say, customer service, or having improved the quality of credit line decisions, or credit giving decisions, or improve the fraud detection, consumer fraud, for example, a great example that David brought up. You know, the decisions that these models are making has to actually improve the business function. So just as a refresher, this is the overall life cycle or kind of virtuous cycle for AI investments. But over the last couple of years, and we've seen this over and over again, model risk management, as is kind of conceived coming out of the 2008 financial challenges, really has been an inhibitor in terms of this investment cycle. And I think I can't speak. David had an amazing presentation on kind of the regulatory pressure that's coming down. These things have been in place for a while, but given the change in the landscape, I won't go through all of them in detail, but given the uncertainty in the general world, not only with the pandemic, but current events, we imagine that AI regulations are only going to increase kind of from the external perspective. But also, as I think David gave a great example of the elevator model, internal pressure is increasing as well. So it's not just the pace of models coming out of the AI and ML box here is not just about, hey, we just need to take the high risk models, but really all models are going to have more and more scrutiny given their important place in decision making for the business. Again, not just supporting decisions, but actually making decisions and having to be held accountable for decisions in the same way traditionally people are held accountable for decisions, kind of across the board. So it's not just about internal pressure or external regulation, sorry. And then this is a really fascinating thing that I would expect most of you as leaders and implementers of model risk programs within your organization are starting to feel. About 18 months ago, our customer base started talking about a shortage of model validators. It was not clear to us whether that shortage, quote unquote, was coming from just a sheer increase in models, because obviously the industry over the last decade or so has ways to scale model risk management with staff log and other things. So is it really a global shortage of model validators? Today in Q1 of 2022, I think we can all agree that this is true, and may even become more challenging in kind of the current business climate that seems to be unfolding. So a real shortage of global of model validators is impacting the ability for that model risk management box to actually process the models that are coming from the AI initiatives in the business units. And there's just more models. This is a PricewaterhouseCoopers study from last year, 30% growth year over year. Why is that? I mean, I think it's obvious, but I'll just say it out loud. Technology is underpinning the AI and ML box. And so whenever technology underpins something, eventually, kind of the exponential growth, again, inhuman factors for scaling kick in. And that's really starting to happen with critical and even more mundane decision-making models within organizations. And then finally, there's just, and we run in this, and I'll spend a little time in detail on this. Model risk management at the enterprise level, in our experience across, across the kind of banking and financial services industry, is not particularly well understood by the business unit functions. And in fact, often there is a either implicit or explicit and either mild or intense tension between providing enterprise patterns for governance and risk and model risk management and the influx of investment and models coming out of that for business units. And again, I think David outlined some of those specifics, and we've just seen that across the industry today. So lack of internal awareness is a real challenge to solving this kind of bottleneck, if you will, that many organizations are facing in their current model risk management processes and organizations. So what do we do about that? And of course, this is from our experience, but we feel we're very well qualified because of our experience to be prescriptive in how to change that bottleneck into an amplifier for this virtuous cycle of investment. We hope to be able to I hope in a few minutes to give you the outline of the way to think about it, some of the terms to use, from our experience, some of the challenges that we've seen. And the first is to really talk about and focus on model risk industrialization itself. In fact, our software Model Ops Center has a very specific package called Model Risk Industrialization, and it's focused on the problems in this particular part of this overall, hopefully virtuous cycle of AI investments in large organizations. And I want to say, for this, I can't stress enough compartmentalizing AI is so systemic in terms of how it's touching organizations. The fact that AI models are increasingly taking over the decision-making in so many areas in these organizations means that the enterprise AI journey is extremely strategic, but that can overwhelm the way to handle specific areas that need attention to kind of get in line with the enterprise AI. And so focusing on your particular area is a critical way to help the overall enterprise process. And model risk industrialization, I just can't stress enough, you as leaders and implementers of model risk programs really have an opportunity today to have a oversized strategic contribution to that this kind of virtual cycle. So, and we'll talk a little bit about what that means. So let's get a little bit more concrete. When you're choosing to industrialize your model risk programs today, and I offer you these slides as ways to start talking about this within your organization, because you're going to have to talk to technology partners. You're going to have to interface with the business unit folks. But this is your journey. It's not their journey. And we've seen that over and over again with kind of the tail wagging the dog when evaluating and driving industrialization around model risk specifically. And so the first thing is to really show that the challenges and what you'd expect from model risk industrialization solutions are focused on model risk problems, right? Shortage of the model risk professionals, right? I need to be able to do more with less, essentially. Just an explosion of tools and ML platforms. Most of our organizations have Amazon SageMaker and Data Robot and Dataiku and Azure ML and Google AI, and that's not slowing down the kind of fragmentation and acquisition of a variety of tools and model types, natural language processing, neural nets, things that are more explainable than neural nets, and being able to benchmark that against traditional models, again, just means that there is just the complexity in BUs are exploding. So we need to be able to scale the enterprise model risk management processes without inhibiting the kind of innovation and important journey that the various business units are on, because different, the types of modeling platforms, data sets, tools, and algorithms need for fraud detection can be very, very different from that needed for mutual bond pricing, which could be then again very different from deciding on credit line. So David talked about how those different types of models can have different regulatory pressure, but they also have different technical and data science and modeling concerns. So being able to handle that, have enterprise processes that will scale while allowing the business units to innovate is critical. And then, obviously, kind of widening the aperture to deal with all models, and so really making model risk management not just about the high risk models that we're focused on because of 2008, but kind of across the board, allowing the internal governance to be as important as the external governance. And I think we can all agree, given the uncertainty of the kind of the business climate today going forward, this kind of widening of the aperture, well beyond CCAR and CECL and these things, kind of having processes that work for everything, fighting things like definitional arbitrage. I'll talk a little bit about that, are important values for any model industrialization platform. So let's turn now from kind of the values and look from our experience, kind of some of the key capabilities that you should kind of look for in a model risk industrialization platform. And there are really three. I won't clear this slide, but I want to talk about kind of the three pillars, if you will, of a model risk industrialization platform. First, it has to have process automation. As you know, model risk traditionally is not a particularly automated function. It generally scales with staff aug, OpEx, and headcount. There are a lot of model validators do a lot of very repetitive tasks. But again, when the models that we're concentrated on are essentially highly regulated, high risk models, that scaled okay. But given the staff, given the model validator shortage, kind of global shortage, and the increasing aperture for what really requires model validation from a risk perspective, process automation is just key. So that is often a new capability for model risk teams. So look for someone who understands how to incrementally do that without, again, disrupting the flow coming from the business units. One way to do that is, the automation of validation tests. Like, do the simple things in an automatic way first. And so this is a kind of key capability that says, look, we already know how to do it. We just want to automate certain things that we do repetitively to allow for that increase in throughput of models through the situation without losing any confidence at all. And then finally, to be able to get real visibility and process controls. So if there's a problem, right, like a breach or some other issue, we should not just be able to see that, we should be able to take some action on that. So, if it's a fraud model, for example, we might want to, really change if we detect there's some problem with the data set. Maybe the internal data set does not fit the conformance of what the model really needs. And so there's a high likelihood that the model, there's some monitor was triggered. There's a high likelihood that the model is now not operating with data that is in its operational kind of boundaries. We should be able to suspend the production of the model. Let's stop doing this and make sure that we have either a backup model or something else to happen. You should be able to look at a glance what models are in the pipeline for validation, what models are in production, where's their status today based on continuous observation and monitoring. So these kind of production process controls that aren't just about, hey, we ran it, we threw it over the wall, put it in production. Oh, if something is wrong, well, it was fine when we looked at it. Being able to integrate into the ongoing operational process, I think, is critical, kind of third pillar of a model risk industrialization process. So let's look now at kind of zoom in and say, okay, I'm a model risk team. Yes, we have all those challenges, but man, this is it touches everything. There's so much money going into AI and ML platforms, and there's a lot of power and decision making on the first line. There's IT involved because of the technical complexity on there. We're the model risk team. How do we get a start on that, and where should we focus in terms of what is a challenge? And so the first thing to do is look at this overall kind of life cycle, just having some awareness. Again, you already know this, but as starting to frame for the organization exactly where you're going to fit in terms of an industrialization capability. So starting with define, right, going to develop and validate, on to production and operationalize, and then retire. The gray things on this slide are really the first line, what the first line needs to do. The green as your responsibility, right, where you come in. And it's, again, I won't clear this in detail, but it's in these boundaries that you have so much low-hanging fruit opportunity to increase the throughput of models from the business units into production operationalization, so they can, and then continuously monitor them so you can increase the chances that that cycle is a positive return cycle on investment. A good example is model classification. So I'll just give you one quick example there, which is, as David said, definitional arbitrage. We worked for a long time with several extremely large banks. One I won't mention, the definition of model. So if something's called a model, it goes through one process. And if it's called a analytic tool, it goes through another process. And lo and behold, that naming can allow for kind of definitional arbitrage. Somebody can kind of skirt something to get something in by naming it something differently. And so one of the first recommendations for any model risk industrialization process is it's a model. If it's making a decision, it's making a prediction, it's deciding on something, whether it was a neural net or fancy AI or even a traditional model, it's really needs to be held accountable for decision. It's a model. And then the platform obviously has to be able to assess the risk and create that documentation. So just being able to do automatic documentation creation in the definition phase on the far left kind of is critical. And then now that it's kind of accurately assign some sort of initial risk tiering, we can go to automated standards, automated testing, and kind of custom metrics and those kinds of things for each particular type of model. So if you look at the development and validate, again, the development team should be uninhibited in terms of what they can do, but the more they can provide documentation, the more they can be involved in the handoff to model validation, then more quickly can the model be routed to the appropriate set of automated tests, et cetera. And then that becomes part of the general kind of production inventory, which then each model may have a different road to production. Some models may be going to the cloud because of a particular latency issue. Some models may be run in batch and only on a weekly basis. And so your model industrialization, risk industrialization capability has to be able to handle those different paths. And then finally, this kind of continuous monitoring. And I think, again, David gave some great examples of, regime change. And now we have to retrain. And, we need to be able to see, and when we retrain a model, we have to be able to revalidate and retest certain aspects of that. So if any of that is kind of manual, then the overall throughput of models through the entire life cycle become choke point, or at model risk management, or worse, somebody bypasses that, right? And then you have models making decisions that can't be held accountable. So those are some of the key capabilities in more detail. The key takeaway here is for model risk industrialization is focus on the things that model risk does, focus on the interfaces and the handoffs and interchange that allow for visibility and accountability for the overall process. With a few minutes we have left, I just want to, so hopefully that gives you kind of a concept of, what to do based on our experience in terms of industrializing your model risk processes to handle not only the external, but now the growing internal pressure. But the biggest challenge we've seen over and over again with model risk teams that are like, yes, we want to industrialize this, is how to build a business case for this, how to talk about it with your partners. So that's something we can help you with, but we can't stress enough that model risk team needs to build a business case for how to scale this. What is the OpEx benefits year over year, right? And what are the real gains in terms of holding the overall life cycle of AI investments accountable to risk-bearing KPIs and be able to be responsive to production issues within the context of risk as the entire program scales, right? So building a business case for model risk that is outside of, hey, we just need more headcount because we have more models, is critical first step in terms of driving real industrialization processes. And I'll kind of end with a few pointers from our experience in helping customers acquire model risk industrialization from Model Op, for example, which is make sure you're really clear that this is what you're doing. And what we found over and over again is the model risk validator shortage gets people's attention in the other parts of the business units. Make sure that there is a process to show value quickly. And kind of on the lower right, I want to highlight hints that we found over time on model risk teams purchasing model risk industrialization software. First, this is your journey. And we've seen this over and over again. Enterprise AI is affecting everybody. And so it's very easy for, so by definition, systems touch a lot of stuff in enterprise AI. So it's very easy for the conversation to get confused about what are the values, what's the, who's doing what. And what we found over and over again is model risk teams tend to not have a lot of experience purchasing automation software. So the first thing they do is, hey, we got to get our technical partner. I would urge you to think about it slightly differently. These are your, these are model risk challenges that we've been talking about. Most of the organization doesn't know the terminology, the details of the challenges, the complexity of the regulations, how to think about classifying and risk. What are the kind of day-to-day menial tasks that can be easily automated? So make sure when you're evaluating a model risk industrialization solution that you qualify the value before you get anybody involved. If it's not going to really drive value from the model risk side, if it's not going to really industrialize that component of enterprise AI, then what's the point in having the further conversations? Once you've actually qualified the value, then I think it's very reasonable bring in the technical partner to say, is this a type of software we could deploy? Are these things that, is it doable? Is it, from an architecture perspective and those types of things? But in terms of value, the values for model risk industrialization is coming from model risk. And similarly, build your own ROI, right? And own your own budget and own your own timelines. We found over and over again that's new motion for model risk teams. We're always happy to help with our experience across that, but it's critical to get it done and don't wait. I think that's we have had companies that thought about this a year ago, 2 years ago, took it to committee, and now are much more, there's a much more urgent situation where if things have been put in place earlier, it might have been a little easier. There's still plenty of time, but don't wait on this. and again, pursue the easiest path for you and your budget and how to purchase software. It could be an annual license, it could be software as a service or managed service, even from a typical organization that gives you a staff log, for example. But own it from the risk perspective, and from our experience, you're almost guaranteed from that perspective to really turn that risk bottleneck into an amplifier for the overall journey and for enterprise AI. So thank you so much for listening. Really excited to talk to any of you about how we can help you industrialize your risk processes, and I'm happy to take any questions.
Great, thank you so much, Stu. So we've had one question saying, any shortage of model auditors, third line of defense in MRM accordingly?
Can you just repeat the question one more time?
Yeah, sure. So it just says, is there any shortage of model auditors, the third line of model risk management, accordingly? I think that was in yeah.
That's a great question. We haven't seen that is a top concern today. The real concern is model validators, the second line. That's what we've seen as a bottleneck. In our strategically, from our solutions, by focusing on the general challenge of industrialization, right, where you're really automating processes and having the second line where there's obvious low-hanging fruit, like don't start with your most risk-bearing models, start with the lower risk models, focus on the kind of daily tasks that model validators are doing that they can easily automate, both conceptually and directly, that kind of, and that's something the second line's been doing. Once the second line is getting some practice with that, the third line can see that. And so an investment in model industrialization focused on second line problems flows naturally to avoid the third line ever being a bottleneck. And that's been kind of our experience in the industry.
Great, thank you. And then someone else says, is this tool mainly for the AI/machine learning models? Can industrialization be done when lots or some of the models are not AI or machine learning, but they're spreadsheets?
Yeah, great question. So both our solution, Model Risk Industrialization on Model Ops Center, and I would say any solution you want to evaluate should have no bias in terms of model risk industrialization to AI and ML models. They obviously have to be capable of handling the most popular and the most cutting edge AI and ML and all of what's happening there. But our platform, and I'd say any platform you should evaluate, should easily be able to handle traditional models, whether they're spreadsheets or or kind of by hand, some code over here. We've seen it all. So model risk industrialization on Model Ops Center is very, very differentiated in our viewing a model as a decision-making asset and handling the modern ML and AI models just as well as traditional models. So we don't take any distinction, and we would strongly recommend that any solution that purports to actually industrialize a model risk process would not be biased to kind of the modern language at all. You might start with some of those in terms of the overall process because they're newer in kind of where they're fitting in. But even models on legacy platforms, that we all know well, should easily be able to be handled by any solution, and certainly is by our solution.
Great, thank you. And then someone else says, should this process automation be considered as AI?
That's a really interesting question. So, and that's one of the reasons I put that kind of really conceptual top level enterprise cycle where you have the investment at the business unit level, AI and ML data science initiatives, model risk management at the enterprise level, and then AI orchestration at the enterprise level, which are really similar kind of patterns for IT, if you will, handling AI model needs. So I would say the industry is adopting a term, enterprise AI, that says, yes, model risk industrialization is part of that overall cycle of investment where AI is defined as models make the decisions, models have to be held accountable. You know, the fastest way to get models that are making good decisions is with new ML and kind of AI techniques on the technical or data science level. But AI initiative is really an enterprise concern. So I'd say the term is overloaded, you know, but with respect to models, it tends to have to be with modern technology, algorithms, and techniques. But with respect to the enterprise, AI is really about transforming the way the enterprise does business, makes decisions and holds them accountable. And so AI is, in that case, model risk industrialization strategically is absolutely part of the enterprise AI journey for our customers.
Great, thank you. And then we'll just very quickly do one last question, saying, how about third-party models? Would this software solution and the automations work with these models?
Absolutely, and I think David Palmer brought that up, which is increasingly regulation is focused on being able to provide visibility to third-party models without, again, creating an inhibitor or a bottleneck. And so in the same way that your model risk industrialization platform should not be biased to the most modern AI and ML techniques, neither should they be biased to internal models versus external vendor provided models. So, you know, models become, in this kind of overall framework, models become the organizing principle for the enterprise level investment, accountability, governance, and scaling. And that has to include vendor models as well. Otherwise, it won't scale over the next few years for all the reasons that David mentioned.
Great, perfect, thank you. Okay, well, I think that's all the time we have, but thank you so much for your time, Stu, and obviously for answering all of those questions. If people do have some more questions, they can obviously reach out to you on the platform. They can visit your virtual booth and ask you some more questions or have a meeting with you. But yeah, thank you for your time, and we will speak to you again tomorrow.
All right, thanks so much, Ellie.